Sign up today for a 7-day free trial at alerts.chartguys.com. Hey crypto friends, checking in on this space. So the bulls are out first thing this morning and we've seen a slow, steady climb the last few days, defending the low $9,000 support levels. And at this point, the bulls have a bit of breathing room. It would require a 9% dump in order to break 9,000 psychological support at this point. But we still know the bulls have a lot of work to do to prove to us that that level can hold through the fall and really through the rest of the year. So the first thing that I'm looking at on this bounce attempt is number one, the last daily lower high of resistance, 10,680. Anything under that level is just a lower high. So we're still about 8% before we even test daily resistance. We also have the daily exponential resistances approaching that we're about to test, and we've rejected from them the last 2 times they've been attempted. Those are the first 2 things that stand out to me. The third thing is a lack of bull volume on this move up. That increases the odds that we see a daily lower high compared to 10,680, because if we were going to break that level on the initial attempt, it would have to be accompanied by big bull volume to see that kind of move. Another thing that I want to point out is from a member actually who saw it before me with a falling wedge on this daily time frame. And this is why I don't trade based off of trend lines, because if I were going to draw this falling wedge based on the previous price action, that's where I would put it. And we would be breaking above that resistance line right now. But with just a tiny little shift, we could set it so that we're not breaking above that resistance level right now. And it still looks very similar, like the same trend line. So just the slightest little difference can make monumental impacts on what these patterns look like. But just the bottom line of what I'm watching, if I were to draw it as I normally draw my trend lines, I would have that as the resistance line. Our support line would be right around there. And we'll see where this candlestick closes today. But essentially what this pattern shows us is an exhaustion pattern. A falling wedge is when we drop down to lower lows and don't see any significant follow through, which shows bears fading in terms of their strength and tiring out. And it's a bullish reversal pattern in general. So it's something I'm keeping an eye on. Again, I'm not going to act on these trend lines. It's just a visual guide of what to be watching. This does have me interested, however, to potentially be looking for an entry on a daily high or low. Let's say we top out here at 9,950 and we start to pull back early to start this coming week, as we have a new month started now in September. And if we form a daily high or low, or even just don't break 9,000, I may look to establish a position looking for that high or low. Let's say I would start scaling in the 9,500s, 400s, 300s, and then I would put a stop under 9,000, and my position size would reflect the space before I would get stopped out, because 5% is a decent amount of space, so I wouldn't want to be all in and risk 5% of my account. I would want my account, I would want my position size to reflect the amount of risk before getting stopped out. The bottom line is, bulls can hold this level. It's entirely possible. A lot of people are looking bearish, and that's because that's where the daily and the weekly trend are at right now, or at least the daily trend. The weekly trend's not clear for the bears, but bottom line is bulls can save it. And let's look at the monthly time frame. Inside bar, and we're currently working on yet another inside bar. So it's going to get very interesting here in September as to where we're headed in the end of the year, whether we are headed back up into the teens as far as thousands go, or whether we're headed down into the 7,500, 8,500 range. So the daily consolidation here, once we do top out, is going to give me the most useful information as far as what is the most likely scenario. Because again, if we don't see this kind of action with a big bear volume spike and follow through to lower lows, if we do not see that happen again, that's a big win for the bulls. So let's see how this plays out. And again, establishing game plans for both scenarios. Bears are going to be looking to top fish. The bears that have been using the 4-hour time frame have gotten stopped out with this follow-through move, but those waiting on the daily time frame are looking at the exponential resistance, scaling into a short position using 10,680 as resistance. And I think I'm going to enter a bullish position when we pull back. The only thing that would prevent me from scaling in to at least a small bullish position in the 9,500, 400 range would be big bear volume and, one daily candlestick taking out 3 or 4 days of this bounce. Checking in on ETH. So ETH, again, this is a very weak bounce at this point. You would look at this daily chart and say, so what? Bulls are doing absolutely nothing. There's no bull volume. We haven't even tested daily exponential resistance. The last little daily lower high is 194, and that's still over 10% away. So we're nowhere near changing the daily trend at this point. If we were going to draw a similar pattern that we just did on Bitcoin, we would be looking at something along these lines. Again, it is the same kind of falling wedge pattern, so something to be keeping an eye out on. And if these falling wedges are going to play out, we would be looking for a bull break sometime just at the end of the first 7 days or so of this month. We would look for a daily lower high. We'd look to pull back down towards support, keeping in mind that with these falling wedge patterns, we could break support and still stay in this pattern. It's the kind of scenario where if we get a bear break, the bulls have to quickly buy that dip, and that's what keeps it a falling wedge. So very interested in the next week of trading action to see if these falling wedges can indeed play out. ETH BTC chart, still very weak. Bulls aren't doing anything to change any momentum. I would still consider anything under 1918 just a lower high, and it's worth watching for a similar falling wedge pattern. Best case scenario for Ethereum and Litecoin would be for both their Bitcoin and their US dollar pairings to see bull breaks at the same time. Not much of a wedge formation here, almost a channel, slight constricting range. But again, bulls have a lot of proving to do on these charts. We've been waiting for over a month for some proof of a shift in momentum, and we just haven't gotten it. Litecoin, same thing as Ethereum as far as weakness on this bounce, and bulls proving absolutely nothing. I would say anything under 76.10 is just a lower high. And again, if we were going to draw a pattern here, similar to the other names, I would draw it looking a little something like this. And watching for the next week of action to see if we can get a bull break. These bull breaks have to have big volume spikes, certainly more than the 20-day average. That's what this orange line is in the volume. So if Bitcoin, Ethereum, and Litecoin in the US dollar pairings are going to break bullish from falling wedges, we would have to see certainly more than above average volume for the bulls and a clear move over daily exponential resistances for that to get followed through. LTC, BTC still very weak as well, and not even really a falling wedge here. Can't draw much of one. Daily exponential resistance, a clear guide. Anything under 737, just a lower high. Bears in full control. XRP, just sideways, hardly even much of a bounce attempt. 28 cents is resistance, and we do have support of 244 and 236. Tightening range. Again, we could draw something similar here, although it wouldn't be much of a falling wedge. It just tells us the range is certainly constricting, and a break is imminent within a week. And last, Binance, getting a bounce going now. Binance is at the top of this bounce. So oversold on a lot of time frames. We were watching $20 psychological. We only got down to 20.88. Oversold bounce is underway. Anything under 27.19 is just a daily lower high, and we will have to see a clear daily trend change with a higher low and higher high for a shift in momentum. Nice little follow through on this bounce to start this morning. And actually, this looks like a bit of a 4-hour falling wedge, so let's use this as an example of what bulls are hoping these daily time frames are going to do. And it would look a little something like that. Although that resistance line needs a bit more space. So that's what it would look like. Bull break, increasing volume, and some follow through. 22.57 is short-term resistance. If we get over that level, there's a lack of resistance, and we would zoom out and watch the daily exponential resistances approaching. But again, this falling wedge on the 4-hour time frame, a little glimpse as to what the US dollar pairing bulls are hoping we are going to see. So, in summary, bottom line, Bitcoin, nice little bounce, but not really doing anything bigger picture, not changing any daily trends, still lower highs, still exponential resistances on all of these major names that we're watching. But the setup is there, and we can see what would be needed for the bulls to prove themselves, and it would be an increase in bull volume, a break of these falling wedges, bull moves over exponential resistances, and it is a possibility to definitely be paying attention to for the next week, because if we're going to see this $9,000 level defended on Bitcoin and prevent from monthly consolidation and keep the weekly uptrend nice and healthy, then these bulls are going to have to break this falling wedge bullish and get back into the mid $10,000 range in early to mid-September. So we will keep tracking this day by day, and I'm going to start placing some bid orders, and then once my first bid gets filled, I will start placing some stop orders, because I certainly wouldn't want to be in any bullish positions if 9,000 does indeed break, keeping in mind that there's probably going to be a lot of people using that $9,000 level as a stop loss level. So just be aware that we could see a bit of a waterfall effect of a short-term flush if that level were to break. But the size of the bounce at this point, and the fact that we've already bounced about 5-6% from our low, which puts us about 9% above 9,000, gives the bulls space where we could see a 5% drop in a day, which would be a big drop, and still not have that clear bear break just yet. So a little bit of hope for the bulls. We'll see how it plays out. Keep an eye on these falling wedge patterns, and we'll check back in the near-term future. Do get things out there. Have a good holiday, Labor Day here. I don't know what you guys call it in Canada. Other than that, we'll see you tomorrow.